What's going on, everybody? It's Jeff here. Welcome back to the channel. In this video, we are going to be talking about two stocks that are in perfect position to double. Both of them are sitting at amazing price points, undervalued due to the tech sell-off, and they have amazing futures with huge projections ahead of them. So stick around. You're not going to want to miss this. I'm going to go over exactly what these stocks are, what some of the catalysts behind driving the price, and where I see them going because of their technology, guys. If you are new to the channel and you find any value in this video, please leave it a thumbs up and consider subscribing to the family. I would love to have you. All right, guys, let's get into the video. First one we are going to be talking about is none other than Palantir. I brought this up on my channel before. Palantir is a software company that lets organizations integrate their data, their decisions, and their operations into one platform. Huge, especially for the future of these large companies needing to innovate in the future. Palantir plays a perfect positioning for this. Some of the news behind them, they've gotten beaten down a little bit. The company is in good position to announce sizable contracts with the government and healthcare entities around the world. Palantir is likely to beat its competition going forward, causing its revenue growth to accelerate. Palantir also said the solution will leverage space, high-altitude, aerial, terrestrial sensors, and data sources for use in intelligence and military targeting operations. One of their biggest clients is none other than the United States government, okay? Palantir did post a revenue of $322 million for the quarter, up 40% from a year ago. This happened on Tuesday. However, their earnings lost 8 cents a share, which is why the price has been beaten down a little bit, as well as the market and especially tech sector as a sell-off as a whole. One thing that did concern Wall Street was the results in the quarter were heavily skewed on government work. Revenue from government customers was $190 million, up 85% from a year earlier. Some of those concerns might be the fact that when the government decides to pull back on their heavy spending, they're going to lose some of their contracts. Well, in my 31 years of being in the United States and seeing how the government spends their money, it's been nonstop going up, and there's been no pullbacks. But like I said, that's just my experience. I wasn't around in the 80s when interest rates were insanely high and maybe the government was a little bit tighter, but lately they have not been tighter, so I do not see that happening. Palantir also repeated its previous forecast for revenue growth of better than 30% year over year, and their goal of a revenue above $4 billion in 2025. In 2020, they did just over $1 billion, okay? Just to keep that in mind, 4x over 5 years, that is huge. Lastly, I guys want to mention too, they had announced a great multi-million deal expansion of its relationship with 3M. 3M is a huge company located in the United States. And it's their goal to support its digital transformation, assisting in the build-out of a dynamic supply chain that enables the global manufacturer to respond nimbly to changes in demand across tens of thousands of products. Perfect positioning, especially relationship building with there, as well as building relationships outside of the government. Last thing, guys, I do want to mention, this was announced on Friday, is that none other than Cathie Wood, her ARK Invest ETF had purchased over 3 million shares. Her innovation ETF bought 2.5 million, and her next generation internet ETF bought 867,000 shares. As you know, anything that Cathie Wood touches gets a little bit of bump just based on her history, okay? I do want to put this out there as well. It was upgraded to buy from neutral at Goldman Sachs, and its price target was raised to $34 on Wednesday. Shares have traded as high as $45, all right? Now, let's take a look at the chart. Right now, it's sitting at just under $24. It had a 52-week high of 45, so they're not going to, in order to double, it's not really going to even be going in uncharted territory. It hit those peaks pretty much twice. If you look at it, the earnings came out, it was a little bit of a beat of what was expected to happen. And then right here, it was down. It's down 30%, 35%, just sheer of the last 2-week tech sell-off. So this is a company that I have a lot of faith in. I have not added it to my portfolio yet, as I do have to change around some of my long-term portfolio to be able to include this, but this is one I am heavily looking at, especially over the next coming weeks, as it is probably expected for the tech sector to continue to do a little bit more of a pullback. We expected about a 10% correction, and it just hasn't gotten there yet. So keep this one on your radars, guys. If you can get in this, in even a little bit lower of the 20s, you get in that 2021, you will not go wrong. I will point this out that if you do choose to get into this Monday or Tuesday and it pulls back further, that's natural because the market is pulling back as a whole. About a week and a half ago, I added 2 companies that are both tech companies that have both pulled back retrospectively 16 and 19% since the buy. I am not worried about it because these companies, I fully have full faith and believe in them and where they're going over the next couple of years, which is what I try to think about when I am investing in stocks. And I look at this as just a simple market pullback, market correction of why these stocks are selling off. So check out this one. Definitely keep this one on your radar. The next stock we are going to be talking about is a stock that numerous people have reached out to me and said, Jeff, have you had your eyes on it? I covered it on my channel before. If you're already thinking you might know what it is, please leave a comment down below with your guesses without looking at other people's answers, and then pause this video, come back and take a look at it. But here we go, guys. It is none other than Nano Dimensions. I still own the same amount of shares that I've had, and I got into it under a $5 price point. If you are unfamiliar with the company, basically, they have a 3D printing technology product right here. It's known as their Dragonfly system to be able to help produce electronics, okay? Circuit boards, access points, many different coils and conductors, MID, it's all listed right here. This company is primed to absolutely explode. Some of the pullbacks have been, one, the fact that the tech sector sell-off, as well as them issuing, I think it was 11 direct offerings in total, okay? I think the end of last year they did 4 or 5. And this recent one was just 500 million that they announced on February 15th. I will give out some good key points about this is that, one, I believe they have about 2 billion in cash. They're only burning about 3 to 5 million per quarter, so they have plenty of money behind them, as well as all of them have been registered direct offerings, and institutions have immediately scooped up all of their shares, leading me to believe that these institutions believe in where the company is going to be going. Now, what their product, their Dragonfly, is really known for, it's going to help with 3 different things. One, it's going to reduce cost of research and development, as well as time for research and development. It's also going to be able to, they're going to be able to keep their proprietary information in-house, okay? There's no longer, companies like, where I am in Connecticut, companies like, Stanley Black & Decker, where they come up with an idea, they sketch it, they draft it, and they send that model overseas, or they outsource that model, and there's the time that goes on for it, the cost that goes on for it to be able to do it, and as well as that, the chance of that proprietary information, being stolen, concerted, used upon to be able to, create their own products in the future. That is all going to be eliminated, and the time to get this back. You don't have to send it out, wait for the tooling to be built for these products, let it get sent back and be able to test it. It's going to be very, very quick and amazing for these companies. They also do have a subscription as a service for all of their materials inside this product, which is amazing, okay? So let me take a look at this one. This is from Wallet Investor. It is sitting at a $9.83. It has a 1986 one-year forecast, 5 years forecast of 56, which is huge. They expect their revenue to be up 472% because the Dragonfly system is really at its infancy. So if you're looking to be able to get into a low price stock that has the potential in 7 to 10 years to go to $100, you're going to 10x your money, this is the one to be looking at. If you look at their charts, it's not going to be going into uncharted territory. It has a 52-week high of almost double of $18. And there again, we see that right here, the 15th, combined with the market sell-off and their another registered direct offering, which we know that every time a direct offering goes out, it dilutes the value of shares. That's why their pullbacks have been consistent. However, the trend has been really moving up since then, and it's just natural market pullback. 984, it's even down to 982 after hours. We'll see where it opens up on Monday. This is an amazing price point for you guys to get into. I have not added to my position. I am sitting under, I think I have 1,000 shares. I think I have 1,000 shares under that. I know it's under that $5 price point between 2 portfolios. I might be adding to this as it is looking very, very lucrative. It did run away a little bit, getting to that $18 price point pretty quickly. However, now that it's pulled back, this is why we keep cash on hand. I have said this in numerous videos, and to everybody part of the private Discord, is always have some cash on hand. And sometimes you might be thinking to yourself that, hey, you know what, the cash on hand that I do have, I'm missing out on opportunities. However, you're going to be really thankful when the market does correct and does do a little bit of pullback that you do have that cash on hand to be able to scoop up those BOGO deals. All right, everybody likes a everybody likes a sale, and everybody likes to go shopping. So keep this one on your radar. Keep both of them on your radars. Let me know your thoughts in the comments. Any other stocks that you're looking at, any other stocks that you want me to review, I would be more than happy to. And please consider giving this video a thumbs up and subscribing to the family, guys. That's it for this one. I'll see you in the next one.